I'm coming to you from the CLSA conference. It's the 20th conference in India. Joining me in conversation now is CLSA's tech analyst, Ankur Rudra. Thank you for talking to us here on ET Now. IT has been in the news this entire last 1 year because whether it's the visa issue since Donald Trump was sworn in or the rupee fluctuation that you're seeing. What's your outlook for the IT sector?
Thanks for having me. So the tech sector has been through a lot of ups and downs in the last 12 months. I think it probably began at the down note with the visa regulation issues, with sort of growth slowing down and the Donald Trump issue at the forefront. I think since then we've come a long way. I think a lot of the worries on the regulatory front I think have been addressed to a certain extent. We haven't seen things work out as badly as thought. Some of them seem to be a bit more noise for the sector. We might see something, maybe in the next few weeks also. But I think the sector has proven that it's a lot more resilient to regulatory changes than before. Secondly, on the growth side, we haven't really seen signs of growth recovery just yet. Some signs that growth is sort of beginning to bottom out. We've seen sort of growth for the larger companies, average out around 6, 7%, 8% or so. But the growth decline which was happening before, I think that's slowed down. I think that's a good sign. On an overall sector basis, I think what's really happened for most of the large Indian firms is that they lost some of the leadership because of the move to new technologies like digital. Some of the consulting firms stole some market share. I think the next 3 years, the big story will be how that will change and how Indian companies make a comeback.
So are you seeing the companies, at least the tech bellwethers, the large caps, the ones that everybody talks about when we talk about the Indian IT sector, move towards the digital side? Because they seem to be making a lot of noise on it, whether it's in Infosys or in HCL Tech.
Yes, I think some of these companies have been speaking about this for a long time. And what has changed now is, I think, finally we are beginning to see bigger projects. We are beginning to see these companies make a bigger impact with clients. Clients of Indian IT firms were primarily working with the consulting-led firms for the longest time on digital, and now finally we are seeing some of the bellwethers not just talk about this, but also win something that's significant. And I think it's about a quarter of the business, or almost all of them, which begins to show that they are making a mark on this side. So I think this will be a key turning point for the sector, where they were losing share here earlier, where they start gaining share now.
What was very important also is that you said is that the growth slowdown that has bottomed out. Do you expect that to be reflected in the stock prices and the valuations of these companies as well as they move beyond the 6 to 8% range?
Yes, I think if you look at the Indian tech sector in the last decade, we've seen two common trends. One, growth has sort of fallen down from 40% to 25% to 15%, and finally 6, 7% now. And we've seen also earnings multiples correct from the mid-20s, which was a significant premium to the Nifty, to now where it's been trading at a discount to the Nifty, and it's probably one of the cheapest sectors, right? So I think this is clearly a sector which provides value, which gives you very strong return on equity, which gives you relatively high quality earnings. And I think if earnings growth recovers from here, I think definitely multiples should reflect that. Because in very few other parts of the market do you see high quality earnings, very high cash generation, with a potential for earnings growth recovery. I think that will definitely help valuations going forward.
What about that entire debate that takes place between the large caps versus the mid caps? Which one would you say would recover better, or is a better bet?
I think it's always very dangerous to make long-term motherhood statements about mid caps versus large caps. What I would say is that IT has always been in the long term a big scale game. So firms which have achieved scale tend to grow a bit faster. Having said that, the larger companies, because of their size, have seen pockets of customer spend repressed more than some of the smaller companies which could be in sweet spots. So I think I wouldn't make a common statement about large caps versus mid caps, but I think in general, in the long term, companies which have achieved a certain amount of scale, more than $1 billion, for example, it's a lot easier for them to grow in the long term. In the short term, you might have pockets of stronger performance if a company doesn't have an issue, or if a company is present in verticals or service lines which are growing faster.
The IT sector was one that used to churn out multi-baggers for the Indian stock markets. Do you still see that happening at all?
Well, all of, whether multi-baggers or not is more of a long-term question. If companies have strong fundamentals, if they can provide earnings growth north of 10, 15%, and re-rating can add to that, you can definitely have multi-baggers in this sector also. And the previous time you had multi-baggers was probably in the phase between 2012 and 2014, when the rupee depreciated very quickly, which added to a significant margin expansion in some of the mid caps that you were mentioning earlier, and also an additional PE re-rating. So I think that there definitely are chances for that to recover if you see margin expansion along with the PE re-rating. But I wouldn't hold out hope for that. I'll just say that the quality that these companies offer in terms of potential of increasing payout ratios, relatively high quality earnings, and earnings growth recovering, I think all of that should add to relatively strong performance versus the market.
You know, the other trend that we've seen in the last 1 year is at least large, actually all of them have been utilizing their cash. We've seen a lot of buybacks, for example, that take place. Do you expect this trend to continue?
I think so. See, like we discussed before, the Indian IT industry on an overall basis clearly has matured. You've seen the industry hit about $120 billion in revenues globally. So you obviously can't expect growth much north of 10 to 12% on a consistent basis. So it is important for the larger companies to start returning capital and thinking about not just growing the business operationally, but also thinking about capital allocation. So I think this is something has begun with some of the largest companies. We've seen them taking a cue from Western counterparts such as IBM and Accenture. But I think this is something which has a huge potential of continuing and should and will continue. And I think that will be another layer of multiple recovery for the sector as well. When investors see the intention and these companies actually paying out more capital, you'll see, I think, them rewarding the companies that do so as well.
So if the large caps are taking the cue from the Western counterparts, are you expecting this capital allocation policy and of rewarding shareholders to percolate down to the mid caps and small caps when it comes to the tech sector?
I think there's clearly an opportunity for that. Not every mid cap company is growing north of 10%. Probably you can count them in less than one hand, fingers on one hand. So I think there's definitely an opportunity for them to do so as well, and I think it will only help them help their valuations if they do that.
Thanks, Ankur, for talking to us here on ET Now.
Sure, my pleasure. Thank you.